Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday, the 21st of January, 2021, 5:15 p.m. in the evening. So, we're seeing more and more of the executive orders coming out of President Biden. We're seeing news conferences. We're getting ready to see his style of leadership. We're seeing a battle for control in the Senate. Not that the Democrats don't have it. If they all vote on one side, 50 votes, they've also got Vice President Harris, and that would give them the 51. But it's all about the filibuster rule. Because they're evenly split and Ms. Harris cannot be there on every single meeting, the Democrats have leverage and vying now for control. If you thought that the peace was there and now they're going to look beyond President Trump, nonsense. Nancy Pelosi is again wants to, and she called for it this morning, she wants her trial date at the Senate. And now President Trump has gone out and hired another battery of lawyers, if you will, and they're talking, Mitch McConnell saying February. So if you think they were going to impeach and just put that in the background, as some TV commentators had yesterday said on Fox, unfortunately, I was hoping that would be the case and just let it go away. Now they're going to waste a lot of time. They're going to bury it in that. When people say they can do cabinet hearings and do an impeachment trial at the same time, total nonsense. Total nonsense. You got to do one or the other at that time. I'm watching certain people in the Senate say that. I don't buy that. But what I buy doesn't matter. Who cares? It's all politicians. At the end of the day, you know what I think of them. So as we look at these markets, we are in a correction mode that we've really seen the Russell suffering the most. And it had been the leader to the upside. It was the leader on weakness to the downside for the past, 3-4 days. And the question is now, are the others going to catch up to it and everything balances out? You don't want to say that the market's in any form of a downtrend. You just made a lot of markets new all-time highs. The energy markets are going to wait for tomorrow's EIA report. That comes out at 9:30 in the morning. It's pushed back because of Martin Luther King Day and the inauguration and so on. So you'll see that whatever those numbers are, the API numbers, I did not think were friendly. So I want to see those. Grain numbers, we saw the grains give up a lot of ground in the past 48 hours. And we're starting to see foreign currencies moving upward against the dollar. So when we come to the S&P, ta-da, all-time high. You're up 80 points for the week. If you were to just stop trading right now, all-time high close. But you're not. So I don't know if we'll correct more or not. When we take a look at the action, that's what I just said. All-time high made today. So I'm not going to say just because you're down tonight that the honeymoon is over between the market and the Biden administration. The market's gone up in the past 72 hours in anticipation of it and acceptance that he is now the president. So that's where you're at. You've got a pattern that is not a trend. You have a lower low and a higher high. The market has upside bias since it's over the 18-day average, which has done a heck of a job in restraining breaks as they take place and containing them. What about the resistance point? You know what I'm going to say. Look at the Bollinger Band. Bingo. Market goes to it and it just runs into that brick wall as it should. You've got to learn how to use Bollinger Bands to understand why that becomes that way. And if you get an embedded reading, and we'll take a look right here, which the market is working on. You can't count tonight because we don't know how tomorrow's going to end up. So let's get rid of Friday's data. What we do have on the market is both numbers over 80 today. Both numbers on the close of business on Wednesday were over 80, but not that way on Tuesday. You need to get today's numbers to lock in to embed. That means they're overbought. I wait to see if they're going to do that. Same thing in the NASDAQ. You're rallied, but now you're starting to move back onto that Bollinger Band. It's very difficult to stay several days or more over that upper Bollinger Band. So I'm looking for prices to start weakening to it. We'll see if that in fact works out. In the Dow, we have a pattern of a lower low, higher high, but it too is trying to develop that embedded reading. You can't count today. The day before, Thursday, both numbers over 80. Wednesday, not Tuesday. Got it? So tomorrow is a very important day for the embedded reading to happen. Generally, you don't get the embedded reading. Generally speaking, overbought doesn't embed. That doesn't mean it won't. We'll see what happens here. The market that's kept its embedded reading is the Russell. So this is still, even though it didn't participate with the markets today, a number of them to make new highs, it did it the other day. It still has the best looking chart. And if you were to say to me, Ira, gun to the head, which one do you want to own? It would be this one until it loses that reading. In the VIX, you're stuck in sideways whipsaw action. Now, as you're approaching 2015, the lower Bollinger Band or wherever it ends up tomorrow, I am going to tell you that I think the pros are waiting for the first trade of the year to sell puts if the market hits that number in anticipation of getting back up to the 18-day average of closes. If you don't hit it for the bull case, well, that's interesting. You can drift here and keep the stock strong. We'll see what the market wants to do. In the T-bond market, everything converted back and you now into the downtrend, which you did with today's action. Now you've got, again, the lower highs. What about lower low? Well, if we take a look at this low, that's the one I want to see. 168 and 132nd. Down here, 168 and 6. So you haven't taken that out yet. I'm wrong. You got the lower highs, but you have the higher low, and you're oversold. Doesn't tell me to do a darn thing. In the T-bond, where I was ahead of myself. You turn the swing line down and you have the lower low. Now the market's had a nice little rally. The bears are in control of the market. You neutralize the downtrend if 137.02 is taken out. Why? That would then give you higher lows and a higher high. I'm not saying it would be over the 18-day average. Don't know. That would become the resistance, but that would break this particular chart pattern. I still contend that the market feels comfortable pushing, and I've been telling you this for 2-3 weeks, pushing on interest rates higher as they believe that the economy with the COVID vaccines that get out there are going to be better. I saw Dr. Fauci today talk about when he thinks that will happen. He thinks we can get to an 80% vaccination rate or 85%, possibly by the fall. That doesn't mean you won't have a more normal summer. I'm banking on that. That's what I really think is going to happen. I think people are going to get these vaccines and they're going to open restaurants. You can be outdoors anyways. And I think our economy is going to start reopening this summer. And by fall, with any luck, God's grace to it all, we will have the vaccine out in our society. In the dollar index, we've rolled back from the resistance of the upper Bollinger Band to the 18-day average where the bull case has to be made. So for those that are bullish, this is where they're supporting it. Why am I not in that camp? Because the momentum is turning down. Momentum down. The settlement today keeps the bias up and the swing line up. I've got 2 of the 3 elements. But that third element bothers me. Why? I am of the school of thought that in many, many cases, most of them, more than 50%, a lot more, momentum will lead price, not price leads momentum. Are there cases where price leads momentum? Often. But the vast majority, I'm going to say from my experience of just looking, I've never counted them, so it's not a numeric thing. I'm going to guess probably 60, 70% of the time, momentum leads price. In the eurocurrency, we have a downtrend that has found its footing. The momentum is oversold. You're getting a rally. Resistance is 122.19.5. Take out the high back here, and you could end up with a pattern with a lower low, higher high. The bears are in control, but I don't think they're going to be aggressive. And that's because you still have readings that are in oversold territory. In the British pound, you went up again to the upper Bollinger Band, and somebody called up the FX traders and said, hey guys, Ira said you're at the upper Bollinger Band. That's a resistance point. Bingo. That's where the market ran into it. You're overbought. strong. The cable, as it's called, is doing exceptionally well. I realize we all think, Brexit and the lockdowns there. Well, they're doing well in getting their people vaccinated. They're doing better than many parts of the European Union. The market's telling you that, and the market's telling you this is one of the stronger currencies. In Bitcoin, this is your washout number. Now, how far it goes, I don't know. You're just at the point now where you're knocking on the door of getting oversold. We know that the 18-day average is often an area where the market spits around and keeps coming back to it. So it wouldn't surprise me if the market just went into a tailspin, wherever the lower Bollinger Band comes in. That could be the next number. What we do know is this rally, year-end, that took place and we saw everybody buying. Did I not tell you over and over here it was the most crowded trade? The second most crowded trade was being short the dollar index. Both took out those people that were in those trades, both. So you're getting pretty neutral as we're coming to the end of January. It's only the 21st. We still have 10 more days to go, but that's what's going on. So when you see this happen, just understand for every reaction, there's a counteraction. And this market came from a very 22,000, got up to nearly 43,000, and now it's given back, $11,000 of that. Big swings. In the Brent versus the March Euro, they're just marching back and forth in this wide swing action, almost like the dollar that I'm talking about, and the and Bitcoin. And you can see resistance is a differential of 318. That's what I'll look at. Right here, when we go to the Brent crude, you're losing the embedded reading. I want no part when you're doing that. I've elected to back away from the energies up until I get through this EIA report. I have been telling my subscribers that in all the products, same in the WTI. I realize it's embedded. I want to get those numbers out of the way. I'm fearful that we have the same thing here that we had just what I showed you now. You get that run up in, like you did in Bitcoin, and the market wants to break away from that because it went directional and won at the end of the year for so long. I want to see them be more comfortable. Still an embedded reading. So as long as you're embedded, let me make this clear. I'm not in the bear camp at all. The question is, do I want to tell my subscribers to pull the trigger on the long side? Natural gas, too oversold. Mild weather, we see that. You have a lower low, higher high pattern. You know, one of the things that I do first thing in the morning, I'm up typically, like today I got up at 1:30. I couldn't fall asleep again. So for me, it's been a long day. You know, here I am right now, up 17 hours, 16 hours. But I read like mad. I'm reading English translation papers from China, Italy, France, and so on. And I'm giving you ideas during the morning on the news, what I see going on. Each Saturday, I switch gears completely. Now, when I switch gears, what I do is I go to just weekly charts. I know that a lot of you want to just trade the longer term trends. And I cover that even in my morning subscriber videos. I will switch back and forth in the morning between the day charts and the weekly to show you reasons why I like something, don't like something, whatever I'm going to say. So you get that. 6 days a week, you get videos. The videos average 20 minutes. I make it easy. Let's assume you only want currencies. You take a scroll bar on the bottom of the video and you just pull it and it'll go right to the currency area. It just lights up big and bold. But let's assume you're not at a big computer and you want to see what I'm doing. It's on your free mobile application with all our subscriptions. You can watch it on tablet, you can watch it on your PC, whatever way you want to watch the marketplace. I start you off with the news at 5:30, 5:40 in the morning. Then I'm going to cover in this exact sequence all these markets with that scroll bar at the bottom. I realize you think these lines don't make sense. You'll be on top of it and understanding them in no time at all. In addition, you get the daily videos as a subscriber. You get the weekend video. You get my special video reports and free access to my live webinars. So there's plenty that you get, and I think you'll find it well worth the price of coffee. What do I mean by that? $7.95 for your first 30 days. You can quit at any time you want. We go on 30-day cycles, not month to month, so it makes life easy. It doesn't matter when you join. You can convert it anytime to a 1-year subscription that lowers the price from the $15 after the first 30 days to as low as $13. Give it a try. How do you do it? Go to our website under the word, when you get there, research. This is all explained. It gives you examples of everything, and that's where you sign up. I'm Ira. Have a good day. Get on board with this because this is going to be an exciting time to trade. Everything you think can happen is probably going on right in front of you. Might want to take advantage of it. Take care.